Welcome to the Hamsi Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Friday, January 4th, 2013. For the market internals, the New York Stock Exchange advanced decline differential closed at 1,569. Nasdaq advanced decline differential closed at 722. We had 66 new 52-week highs for the S&P 500 and 2 new 52-week lows for the S&P 500. Pretty bullish market internals today, continuing the trend of the week. For the volatility, 673,000 contracts traded on the VIX today, with 58 million in total premiums paid. For the dollar weighted put call ratio in January, we saw a 2.8 reading, which is bullish, with 33% of the total premiums paid. On February, a 0.82 reading, which is neutral, with 31% of the total premiums paid. And in March, a 0.2, which is bearish, with 31% of the total premiums paid. Here we have the weekly chart for SPX. We were up today 7 handles or 0.5%. Very nice. You could see this huge green bar for the week. We hit a new high since closing high since 2007 in December. Very nice closing at the highs of the week. Our next target here is going to be 1504 on this weekly chart. On the weekly chart here, also with the moving averages, I'm targeting 1503, very close to our other target with the Sigma channels. So pretty much in line here. Looks like a bullish momentum here. We're breaking up some support above here, some resistance, above here. Maybe try to wait for a pullback and then get in the market. Here we have SPY charts lagging quite a bit from SPX. As you can see here, we have not taken out the highs of 2012 and we are below 2%, 1.5% below the highs. So that's a disconnect here. I'm still looking for taking out those highs around 148 and then going for 150. The Q's weekly chart, here we have it. You can see this trend line we have here from the start of 2009 going up to this week. We perfectly bounced off that trend line, and now the important thing here is we're starting to make a head and shoulders. I have this trend line here, some resistance. We want to break that to the upside to avoid that head and shoulders pattern forming here on the weekly chart. So that's going to be important. If we do break it, targeting the highs of the last year of 2012 and going above 70. So keep an eye on breaking this head and shoulders pattern. For the IWM, this is the Russell 2000 ETF. Here we have a new all-time high close. Very nice. You could see this weekly breakout we're making. And I'm looking for 90 as our next target. So that's going to be important. Let's see next week what it brings. And we should continue to go higher to confirm this breakout. GLD, very important point here. Here we have the weekly chart. You can see the 100-week moving average has been held as support for around 6 or 7 times around April and July. We were never able to close below this 100-week moving average, and this was not the exception. As you can see here, we reversed from the lows today and finishing above that level. So keep an eye on that 100-week moving average. That's gonna be critical. If we fail, I'm looking at 147 target. If we do break that level to the downside, that's around 159-ish. So keep an eye on that one. For SLV, pretty much the same pattern as gold here. You can see the trend lines I've drawn here. Upward moving trend line since 2008. This long 4-year trend line and the 50-week moving average. Those are going to be important to hold. Below 28, I am targeting the 200-week moving average at 25.35. So keep an eye here. Try to play with tight stops. We might break, but it's important to see we have not broken this trend line in 4 years. And last chart we're gonna look at, here you could see the daily chart for SLV. We were down hard today, and then we started going back up, and we finished up 0.24 for the day, which was pretty good comeback. We are above our trend line here for the short term, so keep an eye on that overall.